Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, March the 5th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we are here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. Not really a whole lot to see across the pond. We did get some services PMI and out of Germany, Italian, and Spain. All of those came in above 50, but keep in mind, and Great Britain to be included in that as well. All of those came in above 50, which shows expansion in the economy. One thing to note, though, it isn't the most widely looked at economic data point coming out of Europe for those type of readings, PMI being Purchasing Managers Index. They have the flash estimates, which is the most important one to really look at for them. It's going to be the real leading indicator, and that isn't out yet. So, or that's actually already been out. These are some just revisions and or speculations for the ones that are going to be looked at. Then we also have Rosengreen speaking. He's a Fed governor here in the United States. And finally, for us, we did get our PMI Purchasing Managers Index in the form of the Institute for Supply Management. That is our number that we look at. Overseas, they look at flash more so. Here in the United States, we have Institute for Supply Management. Non-manufacturing PMI, which is the service sector, came in at 59.7, expected to be 57.4. New home sales coming in at 621,000 units sold, expected to be 597,000 units. Now, that is a nice beat, right? Remember last month we were talking about these home sales and interest rates rising. We were starting to see some of these home sales like really kind of come in across the board, all over the place. And then all of a sudden we saw this huge spike in new home sales last month. Came in around 657,000 units, and they were expecting 570,000. So they crushed that number. Well, the revision this month is back down to right around 600,000. So a 58,000 downward revision to last month's number. So not nearly as good as we were expecting. So that 60,000, knockoff of that original number does not make this headline number look good at all. As a matter of fact, it makes it look pretty bad. Most people will look at that headline number and see it as a beat without the revisions, though. So be careful of that. Once people start digging into those numbers, we could see that start affecting the overall markets. And that's about it for the economic data here in the United States and or across the pond. Let's get into the overall markets. We can see crude oil right now. Crude oil is in slightly negative territory. A lot of people calling for this market to go up into the 60s now that we've seen those drawdowns. We do have inventories coming out again tomorrow to see whether or not those numbers will really stick. So, or if there was any revisions. Remember last month's number, they were expecting a build of a little over a couple of million barrels, and we got the drawdown of over 8.5 million barrels. So a big, huge miss there. I was expecting a little bit more follow through with the crude oil, but as you can see, it actually gave it weakness. As sometimes the markets try to do whatever they can to mess with the most people out there, if at all possible. So crude oil, just slightly in negative territory. We've got gold continuing to come off. I don't have any real positions in gold, although GDX is one of those few ETFs that has an implied volatility that is above a 30 IV%. So we could look to start selling some premium in there. I'm just not real confident. This market has stopped its slide at this point. So I'm not going to be playing with gold. I'd like to get a little bit more discernible move here because it could just settle down in and around here. I don't expect it to go up those highs. So I'm just kind of staying on the sidelines with gold right now. Bonds slightly in negative territory. After yesterday, we did get a big rebound because the equities just literally fell out of bed. with a lot of stuff coming out, you know, whether it's Trump technical, I don't know. The market was really throwing a fit yesterday. I don't think that the Trump stuff was enough to make the market do the kind of sell-off that we got, but you know, crazier things have happened. Bonds did get a rebound yesterday based on that big sell-off today, giving up a little bit of ground as some of those weak hands cover, and the equities look to try and recover some of that ground lost yesterday anyway. We've got the VIX. You know, it's unchanged for the most part. The equities really trying to figure out if we're going to rally or continue that sell-off. This is the sell-off we saw yesterday with the Dow Jones Industrial Average. Remember, it was up about 150 points when we talked, and at one point I think it was down over 400. So the overall market completely changed while we were talking. There was that little bit of a lull, and then a lot of follow-through, came down and smashed the value area high, as you can see here, but rebounded and was able to get back above the Fibonacci's there. Again, NASDAQ yesterday, we saw it go up, test the value area high, but came down and tested the 200-day moving average, which is acted as a lot of support in the last several days. I wouldn't expect any different now, and you know, that is as strong as a support resistance as you're going to see when you see it bouncing that many times. That is a pretty strong indication as to support. So keep your eyes out for that. Even if you're trading Fibonacci's or whatnot, you could even draw in a nice little line there to act as a support. You can see we're building out that volume node. I've talked about this many times. The NASDAQ, I was expecting it to come back down and test and settle down in and around this point of control, but we could see that happening with this volume node getting built out, and build a nice big volume node here would be along my assumption that I've been talking about for quite some time. E-mini S&Ps here again. Yesterday testing the value area high, their resistance on the Fibonacci's. Again, staying in this tight little range, building up a nice volume node here where price is being accepted at these levels. So, you know, again, my idea was to settle around the point of control. It's looking like now it's going to start bouncing between the value area high and the point of control, and building out those volume nodes there. Which isn't too far away from what I was talking about. This is what happened yesterday, right? We were talking probably in and around this area, and almost as soon as I got off, we took a massive nosedive to the lows. We did get a little bit of a recovery, maybe about half back of that, but the overall market, and this probably bounce, was more profit taking and people taking advantage of some of those weaker hands, flushing them out. Overnight inventory got very long, but again, they flushed those guys out. That's healthy as far as I'm concerned. We're rallying now since that economic data has come out. It's not that great, but you know, the ISM was quite nice to see that number coming in close to 60. Anything above 50 for those PMI numbers is expansion. Anything above 50 is nice. We get above 60, that's just gravy, really. But you can see the market is recovering off that. The only thing that I've done today is Tesla. I decided to add some short deltas by collecting premium. I looked at a lot of premium buying strategies, and my portfolio is just lock, stock, and barrel. It feels like long delta or long premium option strategies. I needed to add some premium selling strategies, I felt like. So I went into Tesla. It's got it above, it had for a short period of time, IV percent above 50. It's very close now. So we could say it's a yellow light. So I went in and with Tesla, went into the April contract. So it's closest to expiration, about 40 some odd days to expiration in there for the Tesla, and sold the the 335 calls in there for $3.60. I did it small. It's not a full tranche, about a half a tranche for that. And that 335 with a 340 gets me well above several of these major resistances we're going to have to come through. It's going to have to get through this major resistance, then the point of control, which you would expect to settle down. We do have these crossing the 50-day and the 200-day moving average crossing over, 50 crossing over the 200-day, which is another sign of more bearishness to come. So I've got a lot of overhead resistance to to play with, and then even this Fibonacci as well. So I'm not too concerned about this happening anytime real quick. I'd expect Tesla to start, continuing that rollover as they're trying to cut prices, cut staff, and everything else. So still bearish in Tesla, playing that to the downside. Look to get out at 50% of my max profit. That's about it. Check out Thursday's webinar. It's a great one. It's going to be on the broken wing put butterfly. I'll show you how to build that strategy out to increase your probabilities of success. I have specific rules you need to follow, so check those out at protraderstrategies.com. If you can't take that, take it easy.